The purpose of this brief video is to provide a general overview of the property tax system in the state of Iowa. This overview is being provided via the Department of Management, State and Local Government Budgets Division. So again, we're going to spend just a few brief minutes to talk about the property tax system, how property is assessed, how tax rates are determined, and who receives the revenue generated from those property tax rates. So we'll start with that concept first. Within the state of Iowa, property tax supports many different levy authorities or local governments that levy or request and receive property tax. Within the state of Iowa, cities, so city councils within the state, receive about 30% of the statewide amount of property tax. Counties receive about 21% of the statewide property tax. School districts receive about 40% of property tax statewide. So you can see those three entities make up the vast majority of the property tax that is collected and generated within the state of Iowa. There are other local governments that receive property tax support. They include community colleges, county agricultural extension districts, city and county assessors, county hospitals in various counties, and others such as townships and local government special purpose districts. These other types of levy authorities make up around 9% of that total statewide property tax asking. So again, cities, counties, and schools make up the vast majority of what is levied and generated within our state. In order to receive property tax dollars, these local governments have to annually adopt a budget and request a certain amount of property tax dollars. So, again, this is just a visual way to represent how property taxes are distributed within the state of Iowa amongst local governments. Schools being the majority in this case of 40%, cities making up the next chunk with counties, and then other levy authorities making up the smallest slice. We'll take just a few minutes to discuss some property tax terminology. So each levy authority adopts a tax rate, and that rate is expressed as dollars and cents per $1,000 of taxable value. And we'll give an example of that tax rate in just a minute. Additionally, we also see that there is issued a consolidated tax rate, and that is the amount that's arrived at by adding together the tax rates of all levy authorities for a specific geographic area. So, for instance, wherever an individual may reside or own property, they're located within a taxing district. And that taxing district represents the city, if they're within incorporated city limits, the county, the school district, the community college, etc., all the entities that are the same within a specific area. That is their taxing district. And they each would adopt their own individual tax rates. And the consolidated rate then is the rate that's arrived at by adding together all those individual rates from all those different levy authorities. In Iowa, the average consolidated rate is about $32 per $1,000 of taxable value. So when you add up the, $12 rate of the school, the $6 rate of the county, the $12 rate of the city, for example, and you add that all together plus any other smaller jurisdictions' rates, you would arrive at your total consolidated tax rate, and that's the rate that you pay via your tax statement. So we talked about the property tax rate. We'll take a moment to talk about the property tax value. And this is intended to provide a very broad overview of how property is valued in the state. For specific questions, you would definitely want to visit with your local assessor, whether that be a county assessor or city assessor. So value, there is a 100% value, meaning the value that is eligible to be taxed on a property. So that is usually, for most cases and most classes, the market value of that property. Then there may be an assessment limitation applied to that 100% assessed or market value, and that's the percentage of value to be taxed. And it is set each year by a calculation of the Iowa Department of Revenue for each class of property. What results then, if we look at that 100% assessed value and apply any applicable assessment limitation, you would arrive at the taxable value. So that's the value of property determined by applying the assessment limitation. And whatever that taxable value is the value that actually will see the tax rate applied to it. When we talk about property, all real property is assessed every other year in the odd years. And so at this point, when we talk about real property, it's important to know we're talking about things like land and buildings, structures, things of that nature. That's what we consider real property. Most property is assessed locally by your city or county assessor. Utilities and railroad property are centrally assessed by the Iowa Department of Revenue. Properties themselves are divided into classes according to their primary use, and most of these are pretty straightforward. Agricultural property is put into its own class, commercial is a class, industrial, residential is its own class, pretty straightforward there, and utilities. And this classification of property, defined by its primary use, enables those groups of properties to be treated differently for taxation purposes. When we talk about the property tax assessment and then the ultimate taxation of that property, it's important to note that there is an 18-month lag between when property is valued and then when that property is actually taxed on that value. If we're talking about where we're at right now in March of 2025, your local governments will be certifying budgets this spring. They have to do that by April 30th. Those budgets are for the fiscal year 2025-26. That year begins July 1 of 2025. They're using the value that is the January 1, 2024 value to apply that tax rate. So property that was assessed back in 2024 is being used to generate property taxes during 2025-26. So again, your local governments will be adopting budgets by April 30th of 2025 for the fiscal year 2026. Taxes will be collected for fiscal year 2026 in September of 2025 and March of 2026. And just to go back again to that assessment and the assessment limitation itself, the purpose of assessment limitation is to rein in and help manage the control of property tax growth due to simple revaluation or just the market generating the growth of that value as opposed to new construction or improvements to the value. For residential and agricultural property in particular, they are linked and subject to an assessment limitation formula. If the statewide increase in the value of homes or farmland exceeds 3% due to revaluation, their values are rolled back so that the total increase statewide is 3%. And neither class, residential and ag, can be greater than the other. It's important to note, though, when we talk about this percentage of value, this assessment limitation that's applied, it is applied on a class of property as a whole, not as an individual property. So it means that the statewide value can increase by only 3% due to reval, but an individual property tax owner's assessed value can increase um, more than that due to a variety of different local reasons. However, in order to control that statewide growth, again, this calculation is put into place and a percentage of value is actually taxed for those classes at the end of the day. So for residential and agricultural property for fiscal year 2025-2026, ag property is taxed at a percentage of 73.8575. So it's taxed at a little less than 75% of its determined value. And residential property is taxed at a percentage of 47.4316% of its value. So about half of its assessed value or market value is actually taxed or has that tax rate applied to it at the end of the day on your tax statements. For commercial, industrial, and railroad property, it is taxed a little differently. It's taxed via a two-tier assessment limitation. The first being that the first $150,000 of this class of property is taxed at the same rate as residential property, that 47.4316%. And then the value that's greater than 150,000 up to whatever the assessed value is actually taxed at 90% of its value. So again, we talked a little bit about how property is assessed. And keep in mind that the assessment process itself and the determination of assessment limitations is a very statutory regulated process. There's a number of different steps involved, and I'm just giving you a very brief overview for additional information regarding these types of properties and assessments. You'd want to visit with your local assessor, or if you have questions about the assessment limitation calculations, you'd want to visit with the Iowa Department of Revenue. Now, to go back to the tax rate and how we arrive at property tax dollars, the tax rate is presented again as dollars and cents per $1,000 of taxable property value. So, in a city, for instance, they would add together all the taxable value within their borders, divide that by 1,000, and they'd multiply it by whatever their tax rate is. Say it's $8.10. And that would arrive at their property tax revenue in a very simplified form. So let's give a particular example. If we're talking about, say, a residential home in a given area within the state, with an actual value from the assessor has determined your value, market value would be $200,000. In order to get to what that individual is actually billed, we would look at that $200,000. We'd first apply the residential assessment limitation of 47.4316%. That would arrive at a taxable value for that property, what can actually have the tax rate applied to it, of $94,863. And we then take that taxable value, divide it by 1,000, and multiply it by, in this case, we're saying the consolidated rate. So that person's school rate, their county rate, their city rate, et cetera, all those individual rates. We're using that average consolidated rate of around $32. So their $200,000 home, its taxable value is a little less than half of that, of 94,000. Divide that by 1,000, multiply it by that average consolidated tax rate, and this particular tax bill would be $3,000.68. And of course, that can be paid, as you might be aware, in 2 installments in September and March. And this, it's important to keep in mind too, Um, an individual may be receiving a variety of different credits or exemptions on a particular property, and this is not taking into account any of those types of programs that an individual might be participating in as a property owner. So again, those tax rates are set by the levy authorities, by those taxing jurisdictions. All tax rates must be authorized by law. A city or county can't decide on their own volition that they want to establish a special tax rate to buy new computers, for instance. They all have to be specified in existing state law. Rates, limits, and uses uh, vary by law and by the particular levy authority we're talking about. Schools have particular rates, counties have specific rates, cities have specific rates. Some rates do require an election. For example, there have been some counties put to the voters that they want to establish a new property tax rate for ambulance service within their county. That is allowed by state law, but it requires an election of the people in order to impose it. All levy authorities have a rate that they use to fund their general operations. So that's pretty universal. But they may or may not have other rates added on to fund, like I said, specific activities or specific needs. But they all have to be established in state law. And then the rates themselves, as far as what that individual, tax year rate is adopted through a formal statutory process of that local government's governing body. So the city council is who goes through the process to adopt the tax rates for individuals living in that city. School district, etc., county, the county board of supervisors has to go through a very specific statutory process to adopt their tax rate that will be applied. All of these taxing bodies have to have a public hearing on their proposed tax rate and asking and on their budget prior to adoption. Cities, schools, and counties have to actually have two separate public hearings on their proposed tax rate, asking, and their budget. To give individuals that live within that area an opportunity to speak to any concerns or speak in favor of the budget itself or the tax rate. All of these entities have to publish a notice of that public hearing in the newspaper. Cities, counties, and schools have an additional mailer that's sent out to property taxpayers regarding one of their hearings. But there is public notice given via a newspaper, or if we're talking about a township or a city that's under 200, then they actually post notice of their public hearing on the budget. So again, April 30th is the deadline for local governments imposing property tax to approve their property tax asking for the following fiscal year. So April 30th of 2025 for the fiscal year 2025-26 tax asking. And there are opportunities provided to citizens to speak at a public hearing regarding concerns regarding for those budgets or the tax asking or expenditures. And additionally, folks can contact the governing bodies or the offices of those local governments with any questions they have regarding property tax.